Hello, 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 hello. Welcome back to our show where we talk about trading tales. This is a follow-up episode from the last episode that was just giving basics of trading. We are still talking about the beginners information, just the summary to help people understand what trading is all about. In this show, what we do is we turn trading jargon into plain English and trading anxiety into mild amusement. If you have ever thought how hard can trading be and then cried looking for a candlestick chart, this video is yours. Today we are talking about trading for beginners, and trust me, I'll make it simple, fun, and maybe even profitable. So what is trading? Trading basically is buying and selling things to make a profit. Like I said yesterday, stocks, crypto, gold, even oranges. Oh yes, orange juice futures are a thing. Think of trading as a game where the rules keep changing, and sometimes you win if you know what you are doing. It's like going to a garage sale, buying a vase for $5 and flipping it on eBay for $50. Except in trading, the vase may sometimes lose half its value because Elon Musk tweeted about Mars. Types of markets you can trade. First, let's talk about what you can trade. So there's about 4 markets I would want to talk about. First is stocks, where you basically buy a slice of a company. Imagine owning a 0.001% of Apple. Congrats, you own 1 pixel of an iPhone. Or crypto, which is digital currencies like Bitcoin and Ethereum. But be careful. It's like stock market after 3 energy drinks. So it's stock market on roids. The third one is Forex, foreign exchange. Forex trading currencies is trading currencies such as the United States dollar, USD, the euro, and a number of basket of currencies that you can trade. So it's the world's largest market, and no, it's not just James Bond's villain that are trading in it. Everybody can trade. And the last one is commodities, which is what I was talking about yesterday on the last episode, or the previous episode. So commodities about commodities such as gold, oil, even coffee. Yes, you can trade coffee, which explains why I'm broke. So what do you need to get started? Here's what you will need to dive into the trading world. 1, a trading platform. So you will have to choose a trading platform. For an example, there are trading platforms like Robinhood, eToro, Thinkorswim, or Plus 500. That's where the magic happens or chaos happens. Secondly, you need the trading strategy. We'll talk about this one a little bit later. But spoiler, YOLO all in is not a strategy. The third is patience. Okay? Markets don't care about your feelings. Sometimes you have to wait for the right moment. Okay? Think of trading platform like a dating app. You swipe right on good trades and left on bad ones. But just like Tinder, sometimes you still get ghosted. Let's get to the basics of trading strategies. Let's talk about strategies or trading strategies. These are the tools that you need in your trading toolbox. Okay. 1, trend following. You ride the wave. If prices go up, you go up. You buy. If prices go down, you sell. Okay. Simple, right? Not sure. Second one is scalping. So this is where you take quick trades for small profits, and it's like speed dating but with charts. The third one is swing trading. You hold for a few days or weeks. Think about it like binging on your favorite soapies or Netflix. Okay, so you sit and take the whole, call it episode or season, and you finish it in one sitting. That's what swing trading is. You take a position for a number of days, or you take a position for a couple of weeks. And then the last is long-term traders. Long-term traders is you buy and you hold the position for a very long time. It's boring, but it's safe. It's like knitting, but with money. Give you an example. A recent example is in 2023, Nvidia, the chip makers, their stock shot up by 200% thanks to the AI boom. A perfect example of a trend following. AI isn't just writing essays, it's writing profits. Just to give you a personal example about Nvidia, in November 2022, when ChatGPT was introduced, OpenAI introduced ChatGPT, one of the things that came into my mind was, this is the new phase in driving commerce, or the way we do things. You know, you've got the different industrial phase and all of these eras or periods that we've passed through, and therefore artificial intelligence, what ChatGPT exposed, it wasn't just robots, regurgitation of what you've said to a robot. Now you had a large language model, an LLM, that is able to produce something cohesive that is usable. So therefore, the first thing that shot in my mind is, in order for this technology to, it was clear the technology is going to be pervasive. But in order for this technology to be able to sustain itself and therefore power itself, what would it need? So it was clear it's going to need the chip, and the leading chip manufacturer, Nvidia. So then I took a position on Nvidia. Remember, I said in the previous episode, I did in the past, trading, but I was focusing on commodities, and as a result, at some point I decided to opt out, but I still have the balance around it. And therefore that balance was the balance that I used to take a position on Nvidia. That was in November 2022. In 2023, the Nvidia stock shot up by 200%. So that tells you about the timing in trading, as well as the thesis and the conviction. Those are the things that we spoke about in the previous episode, so I won't repeat them now. So what are the tools that every trader should use? Okay, the tools that every trader should use: one, you need to have the charting platform. Remember, we were talking about the two types of analysis in trading. One, it is the technical analysis, and the other one is the fundamental analysis. So charting, now we're talking about the technical analysis. So therefore, for charting, you need a charting software such as TradingView. Most of us, we all use TradingView. I'm sure there may be other platforms out there, but TradingView is what I use certainly, and a lot of traders that I know. And therefore, you need to have TradingView to do the technical analysis that you have to perform. And remember, I made mention of the basic of analysis, and those will be your trend analysis. If you want to do trend, it will be you looking at your floor and your ceiling, that is the limits that you have for your movement in your trade, whether your trade is what is the support and the resistance that your trade has. We'll talk more in detail about those. Some tools such as the moving averages, for you to understand where's the average movement. Is it moving up, is it moving down, or is it starting to taper down? And a number of other things. You may look at the volume of trades that have gone into the positions, because often when you've got a higher volume, then it means you've got a bullish market and people are buying, but you don't know at which point it's going to trigger the selling of some of the traders that have put in profit taking or stop profit taking if you are going up, and it will be stop losses when you go down. So Fibonacci retracements. So there are a number of basic charting tools that you can use for your technical analysis. But in order for you to use them, you need to have a charting platform, and TradingView is that charting platform. So that's the first one. And then the second one is the news app, where we spoke about the fundamental analysis. Where are you going to get these news? Okay, so you may go to whomever that is selling the asset, go to their website. In crypto, we go and look at the paper. What does the paper say? The paper will give you the fundamentals of a token. Why was this token developed? What is it trying to achieve or solve? And therefore the tokenomics around it, and who owns what of this token, and how many of this token is in circulation and how many is not in circulation, and what are the unlocking periods that are going to take place. And as a result, also you want to check what percentage the developers have for themselves, as well as the founders have, and the marketing. That's where the shillers you might have in some cases. Not everybody in marketing is shilling, but you would find some of the influencers will be given free tokens for them to then go into the market and talk about the tokens. And therefore, when people are shilling, they are shilling because they are looking after their bags, they are looking after their investments, and therefore when the investments are up, they know they will sell. But they are saying what they are saying because if the followers are taking positions or buying on their assets will have value. So that's what I spoke about in the previous episode, and therefore it's important for us just to have a correlation to emphasize and make sense about this. So the news app that you could use, it's news apps, any other news apps. For an example, you can use CNBC, you can use Bloomberg. In crypto, we often would use CoinMarketCap, you would use CoinGecko, Bitcoin.com. There's a number of websites where you can go and see what is taking place in the market for you to get to understand the fundamentals or the developments, or what is taking place in the market and the developments that are there. And then the other ones, it's the simulators. Now, simulators is nothing other than opening a demo account, because then when you open a demo account, you can do a dummy trading. This becomes a dress rehearsal in a financial broad way. It allows you to start understanding. It's one thing to talk at a philosophical level and you think psychologically you've got this thing, until you go start and trade. And when you then trade, you realize that you've got time, you've got movement in the market, and you've got unpredictability. Those things are easy said until you go and you take a position because you thought the trend was going this way, and then you start to see the behavior of the market changing, and therefore what happens to you? Are you able to hold your emotions, and what are the convictions that make you make a decision to enter into a trade rather than FOMOing into a trade? We explained it in the last episode. What does FOMO say? So now let's talk about the quick tips for success. Okay, no guarantees, but these are just the quick tips that can help you to progress with a better chances of a solid foundation in trading. One, research before you trade. You're not picking lotto numbers here. You need to spend more time researching. Like I said, I made an example. With me, I recommend that you spend 80% of the time learning and understanding what is taking place in the market, and then thereafter making sure that you are proofreading and checking everything that you are finding. There has to be a correlation, and you have to get to a point in your information sources. You start to aggregate your information sources so that you know which of your mediums of information are more reliable, which of your mediums of information are risky, and which of your medium of information you can take information, go and check it, and therefore if it checks out, then you take it as serious. So you need to aggregate in your research your trustworthy medium, where if they say something, you know it means what it means, you do what you have to do. If they say something, you need to just check and make sure that you've got one or two other sources that are correlating and confirming. And then you've got those ones, when they say what they say, you adopt a wait and see. What I mean by a wait and see, you don't ignore. You place the token, the investment, the asset on your radar, and then you say, I need to go and see the following mediums starting to talk about it, because these mediums, they are in your high trust range than where you, so you don't start by saying no, I'm ignoring. So it's important for you then to segregate your research in terms of how you move from just gathering information to the point of strong conviction, and therefore your ability to then take a position into the market. Certainly, you have to diversify your portfolio in any trading environment or in any portfolio. You have to diversify your portfolio. Diversification means you've got to aggregate your wallet if you are in crypto, such that you have investment on risk or high risk, medium risk, and low risk. Now, crypto is risky, like I've made mention earlier on. But however, there are tokens in crypto that are more solid than other tokens. For an example, Bitcoin is a very, very solid coin or token in the crypto. It's because it's the standard out of which everything has emerged. It doesn't mean Bitcoin is not volatile. It's highly volatile. However, Bitcoin has become the standard that the crypto market is measured by, and as a result, Bitcoin is one of those high tokens that are well regarded in crypto, and they are part and parcel therefore of a low risk and a good store of value. And then you go into the alternative coins, which is the alt markets, and therefore you have to then make your decision with regards to which are the medium and therefore which ones will be the higher risk. The meme coins and everything will be there in the higher risks, depending on the type of meme coin and what that meme coin is really all about. But most meme coins started as just meme coins, just a hype without any utility. But some now are changing, and therefore the more you do your research, you'll understand which ones. But they still remain high risk. And then start small. It's important for you to start trading with a small amount. Previous episode I said, trade the amount of money you are willing to lose. Never trade amount of money you're not willing to lose. Never go to debt for you to trade, because that is very dangerous. And therefore you have to start with a small amount of money. Even if you do have money, please start with a small amount of money, because the mistakes and the learnings that you will have, it has to be the mistakes and the learnings that you are going to go through the process without you being emotionally exposed or you being emotionally desperate. What are the don'ts? Don't chase losses. Something called revenge trading in trading, where a trader makes a loss and think that the market is about to retrace, and therefore they want to buy at the lowest part of the market, and therefore they chase this going down the ladder all the way to the bottom up until their wallets are empty. So be careful with chasing losses or revenge trading. Revenge trading really has emotions in it, because you've made a loss on your long that you had taken, or because you thought that this was a positive trend, which is a bull trend, and maybe things just tend the other way, and then you have a bearish movement on your portfolio or on your asset, and now you want to recapture what you just lost because you didn't take profit at the time that the asset was in profit. So be careful about that, chasing losses. Second one, please don't follow the random gurus on social media. Those ones that will show you how much money they have made this way or that way. You can hear them because it's part of the research, but please don't follow them. Be careful. Last one, don't forget the taxes. Uncle Sam still wants a percentage of what you make, and therefore just make sure that you are compliant. Okay? Like I said, trading is a journey. You'll make mistakes, you will learn. If you stick with it, you might even make money. So it's important for you to make sure that you do not chase after trades, like I've said, or you do not impulsively enter into trades, or you don't suffer from the fear of missing out FOMO because people are shilling the trade, but you follow these guidelines that we've spoken about. There is more to these. I'm trying to break them down into summary so that they become easier. Well, that's all for today, folks, and we will be back with the next episode. Don't forget to like and subscribe. Please make your comments. In the next video, we will be able then to address some of the questions maybe that may be there, if there are concepts that we need to explain on what we've spoken about. Other than that, I wish you all the best. Please proceed with your trading journey. If you are interested, proceed with the information gathering journey if you are still gathering information, and make the right decision that is good for you. Peace. Cheerio. Bye.